Swayam Prabha. Digital India. Educated India.
Welcome back. So, today we will actually starting discussion of macroeconomic subject matters. Okay. So, we told that at very beginning, if you can remember, almost first or second lecture we have clubbed or classified the entire economics discussion into two broader heads. One is called macroeconomics, another is called microeconomics, right. And when we were classifying that, if you can remember, macroeconomics is the subject matter of those things, those economics discussion where we will concentrate or confine ourselves to the operation of or operating of the entire economy wide phenomenon, like overall income level of a country, of an entire economy, right, or say inflation in that economy, or say unemployment, employment scenario, right, all those things. So, economy as a whole, economy wide phenomenon or phenomena, different aspects we will discuss in this course or in this macroeconomics portion. In fact, the content of this course, if you look at, majorly involved microeconomic concepts and few macroeconomics concepts we are discussing, and any macroeconomics, okay, in undergraduate level or even postgraduate level, macroeconomics will start with the discussion of how to calculate or how to compute income level of an entire economy. Okay. In your book, the book we are following, if you can remember, one combined volume we mentioned. In that combined volume, I think the chapter 23 or 22 or 23 we are covering computing nation's income, okay, or calculating a nation's income, like that, national income accounting, there is a chapter. Okay. So, we are discussing that chapter today. Okay. So, by national income or income of, say, when income of a family where I am the head. Okay. So, this family's income, if we want to calculate what we have. So, how much by selling my resource, whatever is there, maybe labor force, labor power or whatever I am selling in the labor market, and from that whatever I am getting as income, that is my family's income, right. Suppose my family 2 members are doing a job, engaged into job, right. So, whatever I am earning and another member whatever he or she is earning. So, if I add those 2 earnings, that will be my family's income, and so on, depending on how many earning members are there in each family. So, exactly that way for a country, for an entire economy, right, whatever the income level, how to compute. So, definitely, or how to add them. So, definitely whatever productive resources, okay, is there in that economy, right. So, the contribution of each of those productive resources into some production activity, whatever they are producing, if we combine them, if we accumulate them in value terms, monetary units, right, that will be the entire country's national income. Look, when I am referring my family's income, so the income from the productive resources whatever my family own, by selling those productive resources whatever we are gaining, that is my family's income, right. Like I am one member of that family, I have resource that some labor hours per day, maybe 8 hours of labor, okay, that I am selling in the labor market and I am gaining some income. Similarly, perhaps my family has some piece of land, okay, that land I am renting out to another producer who is, say, maybe cultivating in my land, right. So, that producer is paying some rent to me, okay, or to my family. So, that is also a part of my income. So, basically the rent what I am gaining or the wage what I am gaining through selling my labor force in the labor market, some of these, if these are the only 2 source of income of my family. So, whatever through these 2 alternative sources, whatever income we are generating, if I add them, that will be my family's income. So, look, these incomes we are generating or we are gaining through selling of some productive resources whatever my family owns, some labor power or labor hour and some piece of land which we are renting out. Okay. So, that way income of a country or of an entire economy of an entire nation should be the income generated through productive resources or factors of production whatever is there within that country. Those factors of productions by employing those factors of production whatever total goods and services or total production we are generating within the entire economy, those productions market valuation will be the nation's income. Okay. So, in that context there is very important terminology called gross domestic product. So, entire countries whatever national income is, okay, that is denoted by one terminology, one associated terminology is called GDP, gross domestic product, gross domestic product. Okay. In short, it is called GDP. Okay. So, what is the definition of the GDP? Definition of the GDP that an economy whatever goods and services it is producing or finally producing, okay, its market value within a particular time point. Sometimes this time point usually in 1 year, but sometimes you will see that quarter 1 year can be classified into 4 quarters, right. In India, one financial year is basically March 1 of a year, say suppose 2020 to, no, not March 1, I am sorry, it is April 1. April 1 say 2020 to March 31st, March 31, 2021. This time period, this 1 year is referred as financial year 2020-21. Okay. So, this 12 months or this entire year comprise of 4 quarter, April 1, April, May, June, April 1 to June 30, that is the quarter, first quarter, okay, of that financial year. And similarly, every 3 months we will tell another quarter. So, in that way 4th quarter of this financial year is January 1st to 31st March, okay, of 2021. Okay. Similarly, if we have a calendar year, say maybe January 1 to 31st December of a particular year, okay, that can be referred as a calendar year, and January 1 to 31st March will be the first quarter. In that way 4 quarters will be there. So, this quarter or year or month when we are bringing, so when we are talking about GDP, it is basically what? Market value of all the finally produced goods and services or final production of all the goods and services produced within an economy, okay, for a or in a particular time point or time period. Okay, that time period sometimes may be 1 year, sometimes may be 1 quarter, sometimes may be 1 month even. So, if it is 1 month, so we will tell that that particular month's GDP of a country or of an economy, or that particular year's GDP of an economy, or that particular quarter, say maybe third quarter of 2020-21 that financial year, like that, right. Now, the way we are defining GDP, every word has an importance. First is the market value. Market value. Okay. So, whatever is produced, okay, and each of these terminology when I am classifying or clarifying, I am clarifying also since this market value is involved here, which are not a part of GDP, although those are also part of our production, okay, that will also will give. So, first the market value. Market value means what? Say in a country, say suppose in our country, how to calculate that GDP, how to calculate nominal GDP vis-a-vis real GDP, all those concepts I am coming one by one. Okay. So, market value means say suppose in a country, say suppose 1 quintal of apple, 1 a particular year, this financial year in India, suppose 1000 quintal of apple has been produced, right. So, in that particular financial year, some overall price level of apple is there in the market, say perhaps say 150 rupee per kg, suppose. So, 150 rupee per kg into whatever amount of kg of apple within that particular financial year India produced, that total market valuation we will land the total market valuation, because 150 rupee per kg into that much kg. Okay. So, total amount of market value of apple we will aggregate or we will calculate, we will get some monetary value. So, that is the part of Indian GDP only from apple. Similarly, so many other goods and services are produced within an economy, right. So, whatever is the final production of those products, so those will be the parts. So, in this way all the productions, all the goods and services whatever are produced within a particular financial year, within that in that economy, that will be a part of that country's or that economy's GDP for that financial year. Okay. The same way. So, we have to consider market value. Now, suppose say in certain rural households you will see that, or many households even urban areas also these days, say you have one kitchen garden, okay, maybe backyard of your home, or these days sometimes people people grow certain vegetables in their terrace garden as well, right. So, whatever vegetables, small vegetables you are growing there, right. So, those vegetables you are actually utilizing them for cooking food at your home, right. So, those are although part of our national production, okay, means it is also some we are using some resources, productive resources to grow those vegetables in our own kitchen garden, right. Okay. Although it is produced within this economy, but it is not a part of GDP of that economy, because these products are not coming through any market transaction. So, that is the importance of market value, market. Okay. So, those goods and services which are transacted through market mechanism, those only are captured within the GDP calculation. Okay. So, the production what is happening within an economy, but which is not a part of or which is not coming through any market transaction, those are not part in a GDP. So, you can see that in this way, all the market valuation of all the products, suppose in India one particular year, say only apple and orange are produced, and whatever total amount of apple and whatever orange, total amount of orange whichever produced, all of them are transacted through market, and through that market transaction, suppose total market valuation in that particular year of these two products, which are only the two products which are produced within that country, is suppose rupees 3000 crore, suppose. Okay. So, you can immediately understand that perhaps actual GDP of India is little bit more than this, because this rupees 3000 crore is underestimation. Why underestimation? Because beyond this apple and orange which are transacted in the market, there may be lot of other commodities, some other farmers are there who is producing apple, another farmer is there who is producing also orange, but they are producing that for their family consumption only, they are not selling that in the market. Since those apple and orange which are produced within the country, but those are not transacted through market mechanism, right. Although those are also production of this country, those are not a part of the GDP of that country for that particular year. Okay. So, you can understand this rupees 3000 crore, when we are telling that is our GDP, this must be an underestimation, right. So, underestimation when I am telling, you can easily understand in which sense those are underestimation. So, very important concepts when we are defining GDP, first is the market value, the production of those goods and services which are calculated or whose valuations are calculated or evaluated at the existing market prices. So, they have to go through the market transaction mechanism first, okay, that is the market value. Now, goods and services, so what is goods and services we know, right, those are which are produced, certain income which are not part of GDP, although that may be some income of an individual. Say suppose in the street where your home is located, in that street there is a temple, right, or maybe there is a mosque, or there may be a church, something, some religious place is there. Usually people gathered there for religion related prayer and all, right. So, you will realize that and some this kinds of religious place, before that say some beggar is sitting, okay, he or she is begging from the people who are visiting that place, right. So, that beggar, suppose a beggar is earning say rupees say 300 in a day. So, definitely that is the earning of that beggar, but that is not a part of GDP of that country. Why? Because that earning, whatever that beggar is gaining, that is basically some transfer payment. Transfer payment in which sense? Perhaps I am giving 10 rupee or I gave 10 rupee to that beggar, right. This 10 rupee is a part of my income. When I sell my labor force or labor amount in the labor market and I earn say 1000 rupees, that time that 1000 rupees is already counted to be a part of our GDP. That is my contribution in our GDP, in India's GDP. Since that 1000 rupees already counted somewhere, I am giving simply 10 rupee of that 1000 rupee to that particular person. So, we should not count that 1010 rupee as if a GDP. No, because if you carefully observe that 1010 rupee is not generated by me, 1000 rupee only generated by me, from that I am giving 10 rupees to some person. Now, the question is how we can understand that this beggar's income should be a part of GDP or not. Look, beggar is earning that amount, that 300 rupee per day or whatever it is, without any production activity. That is not coming through any production activity. He is simply begging, give something to ask people, and people are giving, whoever wish to give what. Someone gives 1 rupee, someone 10 rupee, whatever it is. Okay. So, since it is his income, a personal income, an individual income, but it is not a part of GDP, because that income whatever he is gaining, that is already counted as a part of GDP of some by contribution of somebody else. That is why. Okay. Exactly that way, as a student perhaps you are getting say rupees 1000 per month as pocket money from your parents. That is not also a part of GDP, that 1000 rupees. Because when your parents income say maybe monthly your parents are earning say 50,000 rupees, from where he or she is giving or they are giving 1000 rupees to you per month, okay, as pocket money, this 1000 rupees is coming from that 50,000 rupees. And when we calculate India's GDP, that 50,000 rupees already incorporated or already included in GDPs. So, the pocket money what you are gaining or you are getting from your parents, that is not a part of separate GDP. Okay, that should not be calculated or should not be summed. You are getting some pocket money, your friend is getting some, so many students are there in a country, right, all of them are getting some pocket money. Those should not, we should not count each of them, okay, to get another portion of the GDP, no, because those are all these income, beggar's income, your pocket money, all are called transfer payment. These are not a part of GDP, or we should not count them to calculate while we are calculating GDP, because those are already counted, okay, and these are simply transfer of money from one person to another in that way without any production activities involved in the background. Okay. When your parents are earning some money, they are involved in some production activity, perhaps they are selling their services to some office, or perhaps they are selling their labor force to labor market, or maybe they are doing or they have some different or some productive resource which they are hiring or they are renting out, like that. So, through some they are the resource they own, that they are engaging into some production activity, as a part they are contributing some production, as a remuneration or return to that they are gaining some money. So, that is a part of GDP because that is coming through some production activity, but transfer payment like beggars income, like your pocket money, those are not coming through any production activity. So, that is why it should not be a part of GDP. Okay. So, first market value, then produced goods and services we told, no, whatever the produced within that country. Now, second thing is that final production. So, if you can remember when we told that definition of GDP, it is a market value of all amount of goods and services, of final production of all amounts of goods and services, whatever is produced, this production activity, right. Now, final production is coming, okay. Whatever is produced within an economy within a given time point or time interval, maybe 1 year or whatever it is. Okay. Why final production is important? If you do not consider only final production, double counting can be there, triple counting can be there, multiple counting can be there in general. How? Suppose I am giving an example. Suppose in an economy, no, in India, bread is produced, bread. Okay. So, suppose in this particular year, one particular year in India, total whatever bread is produced, their market value is say 1000 crore rupees, suppose. So, bread involved some amount of baked dough. So, bakery, what they will do. So, bread actually is an output, in between so many other productions are there. Wheat is produced by some farmer, from using those wheats some flour, wheat flours are produced, using those flours some dough is produced, using those dough bread is produced, right. So, if you count whatever wheats are produced in that country, its market value whatever it is, that plus whatever flour is produced in that country, its market value, plus whatever dough is produced using those flours, its market value, plus whatever bread is produced. If you add all those 4, right, what will happen? Wheat is counted 4 times, once here, once here, once here, once here, because to produce flour, wheat is essential ingredient. So, similarly to produce dough, flour is essential ingredient. So, same product in different, it is changing its shape, and it is becoming a new product, and ultimately bread is produced. So, if we have to calculate the part of GDP, we have to consider only that portion of wheat which is finally used as wheat only. How that is? Say suppose wheat is produced, right, in this country, say 1 lakh quintal of wheat is produced in an year. Okay. Out of that, say 9099 that much quintal of wheat is already used to make flour. So, whatever remaining wheat, those products wheats are used as a final wheat production or final wheat consumption. How? A lot of cattle are there, no. So, say hen, okay, or maybe the cow, goat and all the domestic cattle are there, right. Their essential fodder, okay, is wheat. Okay, who are having poultry and all, no, they perhaps they are using wheat to feed those domestic animals, right. So, wheat, that portion of wheat which is directly used to feed say domestic animals like that, or where wheat is used as wheat, final consumption of wheat, only that portion should be a part of our GDP, because the remaining portion of wheat is going to somewhere else to produce another product. Okay. So, only that portion of wheat will be as a part of GDP. Then flour, okay, that flour, say suppose total amount of flour whatever is there, say suppose that market value is say suppose 1000 crore rupees. Out of that, say suppose 900 crore rupees of flour is already used to make some dough. So, remaining flour how used? That flour is used as a final production of flour or final consumption of flour. How you can you remember using that flour? No, gum used to that posters, no, in that advertisement posters, no, handbills and all, people used to paste here and there, right, for advertising. You will see that they used to make some gum using that flour. Just boil that flour, that will be gum, and using that gum they are pasting those handbills, paper handbills to here and there, maybe wall or railway stations wall and all those things, right. So, like that, where wheat and that flour is used as a final consumption of flour, only that's market value should be a part of separately as a part of your GDP in that particular year. So, you can understand why this final production only we are considering. Exactly Dow, whatever the Dow is used as a Dow as a final consumption, that portion of Dow only will be there, and remaining Dow suppose is used to produce either bread or biscuit or something like that, cookies, okay, in a bakery. So, if we add final production of wheat, final production of flour, final production of dough, final production of bread, then you will reach the actual contribution of this chain of production into the GDP. Okay. Otherwise, if you all the wheat's market value, all the flour's market value, if you add, it will be wheat will be counted 4 times, flour will be counted 3 times, dough will be counted 2 times, bread will be counted once. So, in that way multiple counting will be there. Okay. So, this is one way you consider only final production. Another way how you can avoid only every stages of production, you only consider the value addition. So, we are now introducing another new concepts called value addition. Okay. So, suppose I am having a flour mill. Okay. So, I am purchasing say 100 rupees valuation of wheat from the market, and using that 100 rupees of wheat, I am producing some flour, and that flour I am selling in the market maybe 150 rupee. So, you can tell this was wheat and here this is flour. So, you can tell at this stages of production, 50 rupee value addition is there. Okay. First, when wheat production is there, 100 rupee value addition was there, before wheat nothing was there. Again, the persons who are purchasing this flour from me, using that flour, okay, they are producing some dough, DOUGH, dough. So, that valuation total is supposed 250 rupee. So, this stages of production, dough production, actually 250 rupee they are producing, or 250 rupees valuation of product they are producing, out of that 150 rupee they purchase from the market. So, actual value addition is this minus that. So, it is 100 rupees value addition. Okay. This 250 rupees of dough whoever is purchasing, they are producing bread and cookies and all those things, bread etc. I am telling, their market value suppose 500 rupee. So, definitely this value addition at this stage of production, total value addition will be 500 rupee minus 250 rupees. So, 250 rupee. So, total production is GDP of contribution is this 500, or you add this value addition at every layer, you will land exactly that 500 rupee. Look at here, 150, then 100, 250, and this 250, 500. Okay. So, either you go through final production of every layer, okay, only the consider in this particular loop, although 4 different stages are involved, we are considering only final amount of bread. Okay. And we are telling that through this process only 500 rupees contribution to GDP, and whatever final production of wheat, final production of flour, final production of dough were there, those are not entering into this loop. So, those we have to add in over and above this 500 rupees. So, that 500 rupees what I am telling amount of wheat what is produced through this production activities, okay, that we can reach through counting only the value addition of every layer of the production. We can reach the same number, does not matter which way we are going. So, double count or multiple count we can avoid only considering the value addition of in every layer of production. Now you can ask, sir, how this 50 rupees value addition is coming into the production activity? This is because, see, when you are, I have an flour mill, right, I am purchasing 100 rupees of wheat. So, when I am generating 150 rupees of flour, so 50 rupees value addition, that is coming from where? That is coming through contribution of the labor force, perhaps what I am hiring, perhaps the electricity using which I am running my machine, and so on. So, those things, no, labor force I am paying something, electricity I am using, I have to purchase that from the electricity distribution companies and so on, right. So, those contribution are basically 50 rupees. So, value addition is basically contribution of other ingredients, including maybe my service, whatever I am running that machine. Okay. So, whatever labor force I am utilizing or knowledge I am utilizing there, that will be also part. So, those things whatever I am using beyond this wheat as an ingredient, whatever different resources I am utilizing to make or convert wheat into flour, their combined valuation is this 50 rupee. That is why it is called value addition. How much value added at that particular level over the wheat. Okay. In that way we can we can add all these value addition at different stages of production, and we can reach the national income accounting in that way for every kind of production activities whatever is happening within that economy within that particular year. Let us stop here, and in the next lecture we will clarify, we will continue this discussion. Okay.